Is this thing on? Is it? What are we doing? I think we're live. We're going to have some fun today. Why not? Let's get down. I'm obviously not in my home base here, but it is what it is, right? And there's nothing that should stop you from making content these days. If you don't have a good setup, if you're not in a good place, as long as you have something valuable to say, you should say it. So I'm going to practice what I preach right here today from this random place that I'm at right now. Big stuff going on. Big stuff going on. A lot of these things are told you so situations, but you, I promise, will never hear such things from me. Is my sound effect not going to work? I don't have great internet, so I'll bear with me here for a second. But the big question today is, all right, rates have come down. Should I go ahead and refinance? Are rates going to get worse? What if I don't have to refinance? Should I go ahead and wait for lower rates? So I'm going to try to address all those questions today before, and then we'll do that. That's the evergreen content today. Then we're going to dive into some stuff. We're going to talk about the inflation reports that have come out recently. I will do a small victory lap, not a big one yet, but a small one. I'm going to talk about Blackrock today. They're definitely a big deal, but not where you think. This isn't going to be a real estate Blackrock conversation. We're going to talk about crypto today. Crypto today on the mind for sure, and very good reasons why. We also figured something out today about Blackrock. There was this huge thing that I couldn't understand that now makes sense. So we'll get to all that. But question of the day, should I wait for lower rates to refinance? Answer number one, I'm going to give you my rate forecast here. Number one is if you need to refinance. So let's say you have a situation where, you need the cash, you're trying to do something with it. It's investment, you're something else, you're going to add an ADU, you're going to consolidate debts, you're going to pay off an X, whatever it is. Then I would come in right now. We're at the lows for this cycle right now, kind of at the lows for the year, except for the very beginning of the year when rates went straight up. So I would say this is a good time to lock. It is a good time to lock for sure. Remember, this channel is holding strong. We've been tracking this for a while now. I've been telling you how bullish this looks. I've been telling you how important it is for the hold. Has been holding. It's holding. It's holding it. And it's not holding on by much. And so that reason I'm recommending lock at the moment. This could at any time break down. And remember, I'm not always right about these things. Usually am. Not always. So you can't just assume that my predictions are going to come true, although they usually do. So when you look at this and you hear me say things like in the next year or two, rates are likely to drop, it has to. There's gravity that is pulling rates down, and that has to come to fruition at some point. I just don't know. It could be 6 months from now. It could be 18 months from now. I don't think it'll be past 2 years from now, but it could be. And the gravity that I'm talking about is the debt that is held by the United States government, which it creates through the issuance of bonds. Bonds hate inflation. You need to get inflation under control so they can get rates back down so that the government can afford to make its payments. That is the macro situation that is going to cause rates to come down. There is no way around that. It has to be. It has to be. In fact, I think if they had to choose between inflation and lower rates, they would take the lower rates and make us deal with the inflation. That hasn't happened yet. We haven't come to that fork in the road. We could. And if we do, I still bet on lower rates. Okay. Macro finance circumstance of the. So I'm expecting a response here. This one steady move is good. We're not seeing any rocket shit type stuff here. We're going to the top of the range and then back down to the bottom of the range. Then we hang out there for a little while. Then we go back towards the top of the range. Now we're back to the bottom. This is very, very good action, and we want to see this continue. But to expect, if you have money on the table, if you have an investment opportunity on the table, if you have a debt consolidation opportunity on the table, here's how you evaluate it. Should I refi now or should I wait for lower rates? You have to figure out how much it's costing you. So right now, if you're paying, however much money for the debt you want to consolidate, look at what your new mortgage payment would be. If that's going to save you $1,000 a month or $500 a month or whatever, figure that out. How long do you have to do that before it starts to really not make sense? So you can do the math on that and sort of figure out, okay, well, if I can save $500 a month, let's go ahead and do it now. Because remember, if rates do drop later, then you can always refinance again. I know we don't want to refinance a whole bunch of million times, but just keep that in mind. It's not like if you go and refi today's rates, then you won't be able to later if they drop. You'll still be able to later. So what I recommend is always just refinance when it makes sense, because you don't know what the market's going to do. You don't know what's going to happen. So if it makes sense to refinance now, go ahead and do that. If it doesn't make sense, you're, oh, I'm saving $150, well, then wait until it makes sense. If you need to save $250 a month to make it worth your time, okay, wait till then. And if it doesn't, then don't do it. Don't do it. People have been asking me, what about ARMs? Hey, I got an ARM, when the rates were peaking. Should I go ahead and refinance to a fixed and get out of that yet? No, because your ARM is probably still fixed for 2, 3, 5, or at least 3, 5, 7, 10 years. So you're not really at risk. You don't need to panic out of that. You can hang on to that. If rates do drop in the future and you saved yourself from a refinance, that will have worked out for you. That's really all you're saving. So my point is, if you refinance today and refinance again, should rates drop significantly, the only cost to do that was the cost of the refi. Now, if you've ever done a refinance with me before, which I know a lot of people watching this have, you know about my trifecta strategy and how we essentially utilize the money involved and the escrow transfer and the time off payments to neutralize the cost of the refinance. That's correct. One of these days, I'll do a video about it, and then every loan officer will be talking about it. But I have a very specific strategy that we use for refinancing, where we essentially just move the money that you would have been paying. Let's say you didn't refinance. Okay. So no additional money out of pocket. We use that scenario to help eliminate the cost of the refinance so that your balance when you are done with the refinance is lower than when you began. It's called the trifecta strategy. It's something that I have done that I've never seen anyone else talk about, never seen any other loan officers do, but it is something that works. And so you don't have to worry as much about the cost. But if you're right, okay, if you say, hey, I'm going to wait to refinance, I think rates will be lower in a year or two, and you could be right, I would be right with you. The only thing that you're saving yourself is the cost of the refi, which I'm saying you can neutralize to almost nothing or very little, sometimes negative. And that's what your savings would be. So if you paid more per month for the entire time between now and then it actually costs you money. So you just have to do the heavy math on this stuff. So here's my suggestion to you on this. I'm going to give you this right here is, sorry, I'm a little janktified today. Let me give you the breakdown of the numbers. I break down numbers for refinances like no one I've ever seen. Nobody does it like this. And it's not in some hard to read, form or anything like that. Literally just in an email, line by line. Here's the cost. Here's the savings. Here's where you do with the savings. Here's how you evaluate the value of the savings. If you want to get that done, it's very easy. All I need is your mortgage statement, your credit score. You don't have to pull credit or anything like that. We can figure out all the data. It's really, really helpful. So call me, text me, shoot me an email. Let me know how you'd like the information. I will get it to you ASAP. We'll make sure you're taken care of. We'll make sure you get a good deal. We'll make sure you don't pay any BS lender fees. None of that. Okay. Not happening up in here. Timing with the buttons is tough in a slow internet situation. Okay. So, yes, in summary, yes, rates will be going down. There's gravity pulling them down, and that gravity will become stronger and stronger the more inflation goes away. So, yes, I do believe rates will go down. It's a basic certainty, but we don't know when. We don't know when, and that makes it tough. That makes it really tough to figure out when is the right time to do something. So I am recommending people short term right now, get locked in. If you need the money, if you need the consolidation, if you need to get someone off title or pay somebody off or whatever, go ahead and do that now. And then I will keep you informed about opportunities to refinance down the road should one present itself and it makes sense. And after you go through one refi with me, you'll see how we handle the costs, how we try to net zero that for you. And it's really, really simple. It's just basic math, honestly. Okay. Now let's get to some timely stuff to get today, team. All right. So looking at oil. Oil's back up to $93, $94. Why is that? Well, what's going on? Okay. Small victory lap situation. Little one. this wasn't rocket science. I've been telling you this for a month since the last inflation data came out that we probably peaked and that it's likely we are going to see these numbers continue to get better from here. And there are several reasons for that. But this is sort of a uh, man, why do I always struggle with that exact same word? It's basically a something that checks itself. Okay, inflation is something that does check itself to a certain extent, right? Prices of things get too high, people won't buy it, and so then the prices have to come down. It's just like oil in general. The reason why I like the oil trade, inflation works in a very similar way, but it's more encompassing. There's more aspects, more elements to it. So wholesale inflation fell 0.5%. This is today's news. Another sign that price increases are slowing. And that's not a lot, right? 0.5% is not a lot for it to fall. But the key is that it's coming down. We needed to see that. That's why the stock market's been on fire, although today was pretty flat. I think a lot of the muster came out of it today. And consumer prices rose 8.5% in July. This is yesterday's news. And that was less than last month's year-over-year number and was less than expectations. So that's the reason why the stock market soared yesterday. We say, well, hey, wait a minute. If inflation is easing, why would the stock market go up? The reason is because the expectation is that if inflation eases, then the Fed doesn't have to tighten, or maybe doesn't have to tighten as much and can eventually get back to loosening again. Because everybody on Wall Street knows that that is 100% coming down the road. It's just a matter of time. Just a matter of time. Fed will be back in there. They will definitely stop tightening at some point. When will they start easing? Let's see. But that's going to happen for the reasons I described earlier. There's no way around it. You can't do this thing without doing it. It has to be there. All right. So those are those things. Quick victory laps, just quick ones. Easing of inflation pressures, giving the economy some breathing room for now. For now, there's some interesting stuff in here. I think it's interesting that you get quotes from someone like this. Chief economist at Jefferies says the whole recession narrative really needs to be put on a shelf for now. It's not a narrative, guys. It's a fact. We're in a recession. Doesn't mean it's a bad one. Doesn't mean things have to be terrible, but we're in one. It's not a narrative. It's fact. It's not an opinion. It's a fact. So you guys need to get over it and get over it sooner rather than later. A few other signs of inflation declines in the report. Food costs are particularly high. So I think food costs is going to be the really big one that we ultimately have to take a look at and see like, okay, when is this going to subside? Because we can look at oil. Oil is a good barometer for everything globally. And that has been ticking back up this month, or I should say this week. So not excited to see that. That is not what we were hoping to see. But I'm hoping that we get to see oil back down to sub 80s. That would be huge. We'll just see if that's even possible. We would need a lot of reduction in demand. So I'll be keeping an eye on that one for you. Okay, here's the biggest secret. Blackrock. We'll talk about crypto for a second here. And I don't talk about crypto a ton. Everyone knows I'm very long Bitcoin and Ethereum and Cardano. And I believe those three, in let's say a decade from now, it'll be bonkers what those three are worth. And maybe one of them will go to zero. Who knows? That's why I have all three. But BlackRock, this is just announced today, launches private trust offering direct Bitcoin exposure. Okay, what does that mean? So Grayscale Bitcoin Trust, which is one that I own, and that is publicly traded. It's a trust, so you're buying direct Bitcoin and you pay a management fee out of that. And we've been talking about the disparity between the GBTC, the Grayscale Bitcoin Trust, and the net asset value of all the Bitcoin that it holds. And I've been trying to figure out why does it trade at such a discount? Why is GBTC discounted so much in comparison to the Bitcoin that it actually physically holds? It's a very easy thing to calculate. And I'm going to show you the graph here in a second. Now, I believe we know why. Remember when we were talking about, last time I talked about Bitcoin, it was when they launched the Bitcoin short ETF. So we don't have a Bitcoin long ETF, but we have a Bitcoin short ETF, meaning you're betting against it. And they launched it. And when they launched it, what did I say? This is the signal of the bottom. They are trying to get suckers in to short Bitcoin They released the offering of the short ETF, and that was like the exact bottom so far. I mean, anything could happen, right? But that was the bottom. That was when we were in the high teens when it was released. That was liquidity for sure. That's, to me, signaled the bottom, got me even more aggressive with my weekly DCA. And so now we're at a point where we're off the lows pretty decently here. What are we up? 33% from the low, something like that. And they're announcing that they are launching a competitor to GBTC, wanting to give people, and not necessarily as much individuals, but as much institutions, direct exposure to Bitcoin. How about that? BlackRock, biggest fund in the world. Here's that graph showing you the discount. And this is if for people who want to buy Bitcoin, but they feel like it's too much, or they missed out on getting like the bottom or whatever. Look at this. Premium to the net asset value is at 31% as of yesterday. That means the Bitcoin that GBTC holds versus what it trades for is at a discount of 31%. So you can buy Bitcoin right now for a 31% discount if you buy GBTC. And we've been tracking this forever. Why is this the case? Why? We can stretch it out a little further. Here's a 3-year chart. At one point, it was positive. There was a premium to buy it. And that flipped over right here in March of 2021. So about a year out of the pandemic, it flipped over. My guess is, here we are a year and a half later, my guess is that is right when BlackRock said, you know what, we are going to get in this game. And since then, the pressure has been on GBTC big time. It really doesn't make a lot of sense. They filed for, ETF approval, direct spot ETF approval. It's been denied multiple times. They're now suing the SEC as a result. So BlackRock getting involved is definitely a very, very bullish sign for crypto in general, but particularly for Bitcoin. And I don't know what's going to happen with GBTC. I just can't imagine it continues to trade for such a discount. I don't know. Maybe having BlackRock in will help legitimize. Maybe they'll start taking their attention away from knocking down GBTC. Because I mean, if you look at the two, okay, what's going to happen? So why would they do this? Why would BlackRock do this or get their Wall Street buddies and bullies to do this to GBTC? Well, if they're going to bring a competitor product on and they can show that their product trades at actual NAV or net asset value to what Bitcoin's trading at, then it will be a no-brainer. Why would you want to buy one that is constantly trading a discount? Who knows? It doesn't even really pay. It's not really pegged to Bitcoin. It's off. So if they can offer one that is pegged directly to Bitcoin, then that would be huge for them and they should get that business. And I believe that is what this was a play for. I really do. Time will tell, but we knew something was rotten about that. And now we know what it was, and we have a good idea who it was. We don't know anything, but it looks that way. There's smoke, put it that way. Ethereum surged to 2-month high. You're seeing crypto kind of go wild here. Does that mean that, this is the beginning of the next bull market or anything like that? I don't think so, but it's overdue. Most of the stuff is way oversold. I mean, even where Ethereum is today, it's still it's more than 50% off its all-time high. So none of the stuff, don't FOMO into any of this stuff. This is my PSA, okay? Don't FOMO into any crypto. Just don't do it. It's too volatile. You have to dollar cost average into it. You have to. If you do it any other way, you're going to end up hurting yourself. So whatever you do, don't do that. Okay. Let's see what do we got here. We're going to recap. And by the way, BlackRock also, if you missed the video a couple videos ago, just put together the biggest fund that they've ever put together to buy real estate. And we discussed this. I discussed with Ryan Street on the channel. You can check it out on there. Essentially institutional ownership of real estate and why that's changed the real estate game. And why are these guys, raising 30+ billion real estate? I don't think they're going to go buy individual houses. I think they're planning to use that money to buy the real estate from the Zillows, the Open Doors, maybe even Redfin in bulk. So a lot of these companies like Open Door, even Zillow, Redfin, maybe not as much. I don't think Redfin got as deep into it. They were more toe in the water kind of situation, whereas like Zillow went absolute pedal to the metal. Open Door put 2 pedals to the metal, and they own a bunch of houses now. And a lot of those houses are underwater. So the reason I believe that BlackRock has raised $30 billion because they want to go to Open Door and say, we want to buy 1,000 homes from you in this market. We want to buy 1,000 homes from that market. They're going to do all this stuff off the books. And the reason why that's a win is, I mean, imagine if you're Open Door and you have, 10,000 houses, let's say, but you need to start selling them. Well, you can go to the market one by one in a soft market and get your absolute ass handed to you, or you could go off market, because remember, if you sell on market, you're also depleting the value. If you believe that prices are going to go lower, you're depleting the value of your inventory, of your assets. So if you want to sell 500 homes in Arizona and Phoenix, let's say, but you also want to keep 500, the 500 that you're selling are creating comps that devalue the other 500 you're keeping. However, if you sell those as a package deal to Blackrock off the books for a discount, and they'll probably buy them for whatever discount, then you don't you don't impede the value of those other 500, because those aren't comps anymore. Those aren't comps. That stuff happens off the MLS. It's a private sale. It doesn't get recorded, and it will be recorded in some fashion, but you won't get that data. It won't be a comp, and because it'll be an institution large sale. It'll be a bundled sale. So it won't be a comp against your other inventory. That's the reason why I believe they've raised the money, because they know that some of these big institutions have gotten in trouble. They bought at the top, they overpaid, and then the market got soft. They did exactly what Blackrock was hoping they would do. And now they're going to come in and save the day and pick up another $30 billion in single family residential American real estate. So that is my opinion about why they made the move, why they're doing what they're doing. You see what they're doing with Bitcoin right now. Pay attention to this fund. There isn't one that's more plugged in politically. There isn't one that has more power. This is the one. This is the one all the movies were made about. This is it. What are they doing? They're launching Bitcoin, direct Bitcoin access for institutions, and they're buying real estate from other institutions who don't know what the hell they're doing. Those are two things that they're doing right now. What are you doing? I'll tell you this, a buyer of real estate right now, I watched the inventory spike, and I kind of started going like, oh, all right, come on, here we go. And it just seems like it's just kind of, I'm still seeing stuff come on the market, but most of the emails I'm getting are about price reductions, not about new listings. And I know we're still seeing the new listings come on, but like the wave of the inventory dump that everyone was telling you was coming is not coming. At least it hasn't yet, and I don't think it is. Maybe a lot of people stick their toe in the water. Oh, can I still sell it for what I could sell 6 months ago? Nope. Okay, we won't sell them. And so I'm waiting. I'm sitting there looking at it, and it's just like I keep looking. I have a certain area I'm looking in. I have a certain everything, and it's pretty open. It's pretty broad. It's not like I'm looking for a needle in a haystack, and I'm just not seeing a ton of inventory. So I personally believe that we are going to see inventory sort of slide off a little bit here, and that may keep the market. That's definitely going to keep transactions down. The number of transactions is going to be low. People are going to be hurting. People in the real estate mortgage industry are going to be hurting. We're already hurting. I have so much time to help my clients, which I'm glad. I appreciate it. I'm thankful for it. I spoke with a new client who's going to buy, and everyone's telling me this. He's going to buy in 6 to 8 months. Everybody's telling me that right now. I'm going to buy the first of the year. I plan to buy in 6 to 8 months. When should I get pre-approved? We're timing it out. I'm calling people all September and October to get pre-approved. Calling people back. We'll see if they still want to do it. Who knows? Maybe they'll see something that they like in the meantime, and we'll have to do a shotgun wedding situation. Who knows? But a lot of people, and this is so my message to buyers is this: if everybody is going to wait 6 to 8 months to buy, when should you buy? Before or after they do? I'll let you answer that question. All right. Let's see. Is this working? Is this thing on? I have such a janky setup right now. Thank you, Nathan. Private sales aren't comps. It's true. It's true. It's true. It's true. Why else would they do it? You tell me, why else would the biggest fund in the world, managing trillions of dollars, raise 30 billion new dollars, by the way? A fund. So who knows how much of their own money they were already planning to put in on this? Why would they raise 30 billion to buy real estate at a time when the market is just starting to soften? I'll tell you why. I know the answer. I know we're speculating here, but deep in my soul, I know the answer. It's because they could smell the opportunity. See, the thing about Wall Street is, this is the reason why they took out Luna, the crypto. You guys remember that? Do Kwon billionaire to zeroaire in like 4 days. That happened. Why? He exposed himself. He was flapping in the wind. Wall Street sees that, they smell it, and they run to it with knives out. And I believe that is what's happening right now. BlackRock is running at these people with knives out, going, you know what? We see that your pants are down. So we're here to sell you a belt. And they're going to save the day for some of these companies that got in over their heads. Thanks, Nathan. All right, guys. Here's the deal. Here's what we're doing. I'm helping people refinance. I'm helping people get pre-approved. We're helping save people money. Veterans, VA loan purchasers, VA loans, double check your VA loan with me, whatever you do. Too many times people are paying too much. They're just paying too much. You're getting rates that are way too high, paying fees, all this stuff. Please don't do that. If you're a veteran, get a loan quote with me. At least double check against whoever you got a deal from. If you got a great deal, I'll tell you. I have no problem with that. I want you to get a great deal. I'll be okay. Don't worry about me. But I want to make sure that you're going to be okay. So if you get the chance to do that or share this with someone, let them know. Your boy has plenty of time on his hands. I can help you out. I can hook you up, and we can have a great time together, saving money, buying real estate, or both, as it may be. Give me a call, shoot me a text, send me an email. I'll be here to help whenever you need me. Have a great night, guys. Take care.